Hi, I'm Joy Macknight, Deputy and Transaction Banking Editor at The Banker, and I'm joined by Matthew Davies, Head of Global Transaction Services, EMEA, at Bank of America, Merrill Lynch, to discuss how transaction banks are stepping up their game in light of emerging technological innovation and the threat from new competitors. Matthew, thanks so much for joining us today.
Thanks, Joy.
So you've been a year in your new role. What do you think are the biggest challenges and risks that corporate treasurers are facing today, and has that progressed maybe over the past year?
It's interesting. I think, from a pure volume perspective, I think they're facing the same kind of volume of challenges and risks. And frankly, that's their day-to-day job, and they're used to adapting to this, and they have the skills and the background to be able to do it. Really, it's the nature of those challenges and risks, I think, that has really evolved over the last couple of years. I think front of mind at the moment, obviously Brexit. There's so much uncertainty around Brexit, and everyone's looking for answers that have not yet been defined. And there's potential implications on business models, for example, which would have a direct impact on Treasury. And in a similar vein, I think tax reform in the US, that has actually had some impact for some of our clients as they think about how their business model might evolve and adapt, and therefore the Treasury operating model has to adapt accordingly as well. They're spending a bit of time thinking about GDPR. This is banks and corporates really thinking about how they store, use, and control personal data, and big implications there for companies and banks, frankly. And then there's the constant focus on technology, on what's the latest and emerging technologies, and how do they keep up to speed with what's going on.
And obviously innovation, there's tons of innovation happening at the moment, a lot happening within the retail space, but now it's starting to impact the transaction banking space. How do you think transaction banks should be, adapting themselves to the new innovation?
I think there's two ways of thinking about this. First of all, I would say internal, take the internal view. And we spend a lot of time thinking about how do we leverage technology and other innovations to improve ourselves internally, which will then in turn give a better client experience to our clients. So it's looking at the use of robotics, looking at the use of artificial intelligence to improve our internal processes and deliver a better client experience. So there's a huge internal focus on innovation. And then we look externally, and we look at how do we partner with some really interesting companies out there that are delivering interesting capability that allows us to develop new products and services to deliver to our clients. But also, how do we, innovation isn't just about spending money, it isn't just about spending dollars. We're looking at what do we have already that we can put together in a different way to meet emerging client needs. And one quick example, if I may, would be Liquidity Express that we just launched, where we looked at the virtual accounts platform that we have, we looked at the global liquidity platform that we had, and we looked at our electronic banking tool, CashPro. And by bringing those all together, we can deliver a very simplified liquidity management tool that gives a treasurer greater control, very quick and easy to set up. And that's just been launched recently. So that's innovating just by looking at what you already have and packaging it in a different way.
And how do you think transaction banks are really responding to the new competition within the landscape?
So there's been a lot of talk, I think, over the last couple of years around this real shift, particularly in the fintech space, from competition to collaboration. And I still think there is huge opportunity for us as banks to leverage technology out there. There's many examples that I could point to that we've done at Bank of America Merrill Lynch, but I think the same is true across the industry. There's a real difference, though, to me, between some banks that purely look at fintech from almost a venture capital angle, looking to make a strategic bet on a company that they think has got an interesting proposition, versus banks like ourselves that really make sure that this whole approach to equity stakes in fintechs is very much linked to the strategy of the business. And we only do it where we see that there's a use for that technology either within the bank to improve ourselves and deliver a better client experience, or to deliver new capability to market quicker than we would be able to do if we were just trying to do it ourselves.
And my last question is really looking into the crystal ball. What do you think that transaction banking will look like in, let's say, 5 or 10 years' time?
I think we're in a really interesting era of transaction banking, and my view is it's going to change more in the next 5 years than it has done in the previous 30 years. When you think about it, the internet had a significant impact on how we interacted, but didn't fundamentally change the way transaction banking worked. And I really think about it in 3 ways: information, infrastructure, and interface. So if we take interface, for example, we talk about the omnichannel approach, and this is a consistent experience delivered regardless of the channel that you choose. And actually, when you think about how more open that's becoming, and PSD2, for example, is driving a much more open approach to interface, I think that's a key area that we're going to see a lot of change. When I think about infrastructure, fundamentally, the correspondent banking model hasn't changed that much in the last 25, 30 years. And when we think about how clunky that process is, there's a lot of opportunity for efficiency there. And there's companies out there that are really challenging the way that we've been thinking about the correspondent banking model. So I think because there's an efficiency gain there, I think that's going to be an area of focus over the next few years, an area of change. And the final one, information. We all spend a lot of time talking about data and the value of data. And banks and other companies sit on a lot of very valuable information. And it's only now, with emerging technologies around machine learning, artificial intelligence, and greater computing power, that we're really able to fully harness the data that we have and deliver it in a more meaningful way to companies.
Excellent. Thank you so much for your insights, Matthew.
Thank you.